What is going on, everyone? Welcome back to another video, another day, another dollar. We're looking at our futures contract per usual. We're looking at the daily chart. We're going to run through this rather quick. I tried to keep them short, and sometimes it doesn't work out that way, get on little tangents. But today we're just going to kind of focus on what's just kind of happening in the bigger picture, and then kind of touch on what do we need to see from both sides of the market. So today was a wacky and choppy day. FOMC days typically are just choppy days. Uh, the range wasn't terrible, nor was it great. There were a couple of opportunities early on in the morning that if you capitalized on, but for the most part, it was just chop. I traded pretty well today. Actually caught shorts early on in the morning, around D period, C and D period actually is whenever I got involved on shorts and made decent money. Um, Overall, not a bad day. Closed up on the day. Another positive day to add to the books. A green day. We love to hear it. Love to see it. But right now, we are just in the midst of a bunch of chop. So far on the daily, we are back to balance. All right. We've talked about how the monthly's been one time framing down and how we need to get above a key level that lines up with our weekly balance high as well. We are in dire need of getting above this 79.75 level on the upside from a weekly standpoint. Okay, we may retest that area pretty soon. All right, the monthly is down, the weekly is in balance still, and we are looking to see if we come out of balance on the weekly, or do we come out of balance on the weekly to the upside, or come out of balance to the downside on our weekly. All right. It's a very large range that I have here. I'm thinking about English, tightening it up to around this weekly low here. But so far, it's a pretty large range from a weekly standpoint. All right. The weekly and the monthly highs have to go at some point in the big picture. Now, as far as a slightly smaller picture, our daily, well, basically we're back to balance. We really haven't done a whole lot. We tried the one time frame down, didn't really get much going for it. And yesterday's price action, same thing today. We tried to push lower and didn't get anything for it. So we are in a nice little 5-day balance. We're going to trade between this 57.24 level and 55.97 level for quite some time, I think. Either we consolidate for a couple of days in this range, or we come out of it pretty quickly. I think 5,600 bulls absolutely must defend. If they do not, pretty good chance of rolling over, getting down into the 5,500s, and so on and so forth. And that would also indicate more of a failure at the weekly balance highs. However, if we do get going to the upside, because so far we've tried pushing down 2 times in a row and really found crickets. We really haven't gotten much below 5,600. So if the bulls can really get pushing to the upside and take out the balance high up here at 57.24 for this daily high, right? We can take out the second daily high, push up, we have a pretty good chance of testing the weekly balance high and that monthly high, and possibly coming out of balance on the weekly, be one time framing up on the daily, and then putting the monthly back into balance at some point in the future. Other than that, you're just going to find a whole lot of chop. Today, that was pretty much my reasoning on the day, the daily, as far, or the intraday, I should say. I was saying, I think if we got above 5670, we should have a good move up into the 5700 level. If we break below 5620, we should have a good move down into 5600 and maybe even 5575. Anywhere in between 5670 and 5620, I really didn't want to do anything and just considered it a whole bunch of chop. And that's pretty much what we got today. It was a whole lot of chop. I mean, you look at your 1 minute chart, whole lot of chop. Now, I do want to bring attention to our 1 hour chart here. From time to time, I do mess with trend lines and just kind of like to see how they play out. Right now, we do have a bit of a wedge pattern going on for those that like to look at that. I do. I don't lean too much on it, but I do like to look at it because there are people out there that look to see how we do things. So as you can see, we have a nice uptrend pattern, uptrend that we've been holding. Today we broke below it, found crickets initially. You can see back here on this day, we broke below it and found crickets. Today we attempted to break above. So I think moving forward into tomorrow, if we can get above 56.75, we might have a good chance in pushing up into that high and seeing how we handle things up there. We can break above 56.70. I think 5700s and that 5720 level will come into play pretty good. If not, then this little wedge here might get tighter and we'll end up rolling over or breaking out one way or the other. But just something cool to look at, something I like to see from time to time. Just overall, a whole lot of chop, but you can see on our daily how we're holding our 50-day moving average. Pretty good so far. 2 times now, it's been somewhat tested, and you're starting to get a little bit of a curve up on that 50-day moving average. Testing that 10-day moving average, holding it pretty well. You can see the 20-day moving average starting to get a little bit of a curl up at some point. So I think maybe if we do break out of this, obviously that 200 and that 100-day moving average will become a target on the upside. We'll see how we react when we get there. I think that 5,800 level might be a pretty hefty level because of that. And then we may end up pulling back and retesting around this 56 level, the 5,600 level, because at that point you'll have your 20, 50, and your 10-day moving average kind of all in the same area crossing over to the upside. Doesn't necessarily mean anything. However, we've attempted multiple times to push lower and really haven't found anything. Volatility continues moving forward, and you just got to wear your hard hats. That's how I'm gonna have to be. I'm just gonna have to wear my hard hat and just hope for the best MGI or market generated information possible. If you'd like to learn more about that, go check out Paul Asmar on YouTube. If you want to join a trading room where there's a bunch of great traders and Paul is on the mic teaching everybody how the market's forming and what we should be looking for, check out comingbacktrading.org. Excellent mentor. Highly recommend. But yeah, that's pretty much it for me going forward. I don't want to be playing in the 5650 area. We'll see how we react to the 5700s if we get up there. See how we react if we get below 5600. If not, I think it's just going to be a whole lot of chop, which means you got to reduce risk by keeping the risk small, being in and out. Do not get married to a position, in and out of a position, and just hope that after this contraction of range and volatility that maybe we'll get some type of move back to the upside if you're a bull or to the downside if you are a bear. So with that being said, ladies and gentlemen, I hope you all have a wonderful day. We'll catch you guys tomorrow. See ya.